Starting. All attendees are in listen-only mode.
Hello, everyone, and thanks for joining us today. My name is Scott Olson, Director of Marketing. Could I have some of you type into the questions panel whether or not you can hear me okay? Thanks, Barry. Thanks, Lee. All right, guys, thanks. So we have a special guest host today. His name is Ross Cameron from Warrior Trading. He's going to present a presentation about momentum day trading strategies. And also with us today, co-hosting with Ross, is our CEO and founder, Dan Merkin. I'll be helping out in the questions panel, and we'll try and get to those as you ask. There'll be a question and answer period toward the end of the webinar as well. Please direct your questions to the questions panel. The audience is muted. Dan?
Thank you. Thank you very much, Scott. Before Ross starts, I just want to kind of set the tone for the presentation and let everybody, first of all, I want to thank everybody for being here this hour. But why do people need Warrior Trading or other chat rooms or just assistance? And I want to kind of draw the analysis to think about world-class golfers like Rory McIlroy or a Tiger Woods, or all these, or Jordan Spieth, these guys that are very famous and are amazing golfers. Well, they all have a swing coach, and these coaches are there to help them hone their feel so that they're, again, more efficient and execute better. And this is exactly what is done at Warrior Trading. And obviously, Ross utilizes our technology, is an expert at it. But what he's got that is very difficult to train for, no matter what kind of technology you have, is that feel. So without further ado, I'm turning it over. Ross, take it away.
Hey, thanks, Dan. Thank you, Scott. And everyone can hear me okay? If you just want to type in yes, you can, that'll be great. All right, awesome. Okay, great. So thank you guys for all coming out here. I know it's a little bit late for East Coasters, but of course for you Pacific Coast time fellas, it's just early after mid-afternoon. So we'll get started here with part one of a two-part day trading strategies webinar. All right, so as you guys know, as Dan just mentioned, I run warriortrading.com. We have a day trading chat room, and we also have swing trading, and I teach trading. That is my focus, teaching people how to trade. I've developed a successful strategy, and I share that with everyone that's in our room every day. So we trade from 9:30 until usually about noontime, and then in the afternoon I'm often working with students. And then from 4 to 5 p.m. we have day trading and swing trading classes. All right, and we have some special coupon codes at the end of the webinar here for you guys. So let's just start here from the beginning. Some of the critical skills for successful day trading. First and foremost is knowing how to manage risk. And we're going to come back to that a couple times through this webinar, but managing risk is absolutely fundamental for success in trading. Secondly, developing a trading strategy, right? You need a strategy, and my strategy is based on patterns and based on momentum. I trade chart patterns on momentum stocks, so I'm very much a technical trader. I don't really trade fundamentals or value. I trade technical. So that's what Trade Ideas is so terrific with, because I can use the scanners to look for very specific technical conditions. All right, and then obviously a critical skill in trading is learning how to find stocks. You can have a ton of knowledge in theory, but when you actually try to put it into practice and make money in real-time trading, you need to know how to find stocks. So I trade momentum, and I use Trade Ideas scanners to help me find those stocks every single day. Now, day trading, I mean, it works based on us buying a stock that we expect is going to move up, right? The faster it moves up, the better. So, in other words, as day traders, we profit from volatility. If a market isn't moving, we're not making money. So if you're a long-term investor, you can profit in a slow-moving market, right? Small percentage gains over months and over a year. That's good. A mutual fund, if you get 6 or 7%, you're going to be like, great, that's fine. Okay, but as a day trader, we need a lot more volatility to profit. And what we do essentially is we leverage our accounts. We work much more aggressively, but we work on a very tiny scale. So we're working with 1-minute charts and 5-minute charts. and we're looking for opportunities to get in and then, of course, quickly get out. So we need to find stocks that are moving, and we need to find volatility, but we need to find volatility that we expect will be somewhat predictable. So it's not just hunting for things that are moving, it's hunting for very specific setups. So I've found that in general, the best volatility comes from stocks that have just reported earnings, have had a big press release, and of course biotech stocks that have any FDA approvals or results from clinical trials and that sort of thing. All right, now most day traders fail. And they fail not for a lack of trying, but for a lack of employing basic risk management parameters on every single trade. It's not that hard, but as a new trader, it's just not something that you're taught. And I say this from experience because I struggled as a new trader, like a lot of traders do. Day trading requires specific skills, but it requires the ability to make quick decisions and at the same time have a lot of discipline. And many new traders, initially at least, lack the ability to maintain composure when they're stressed out. Okay, so say you get into a position and you all of a sudden realize you're in 5,000 shares of XYZ and it just dropped 20 cents and you're down $1,000. Right, now your heart starts pounding, and instead of allowing your rational thought process to go through and say, okay, I'm coming up to my max loss, I need to sell, you start thinking from a position of fear, and you lose the ability to make good decisions. You lack discipline, you end up holding it too long, maybe you do something even worse like average down, and next thing you know you're holding 10,000 shares and you're down 40 cents. Right? And when you step back and look at it a day later or a couple days later or even hours later, you think, what the heck was I doing? What was I thinking? And you weren't thinking. You were so caught up in your emotion that you allowed it to really just hijack your thought process. And that's why most traders fail. We have to be very, very disciplined. But don't feel bad. Being disciplined is like a muscle. It's not something that you just get a certificate for and you have it forever, like learning how to swim or learning how to ride a bike. Once you've got it, you're good. Discipline is like a muscle, and you can strengthen it and get really good at maintaining discipline, and then you can let it kind of atrophy and get a little slack about it, right? But the market will always correct you. So even for myself, there are times where I recognize that I'm being a little complacent or not using as good of judgment with risk management as I should, and it's reflected in the fact that I'm giving back profits. So whether you're a new trader or an experienced trader, discipline is something you're always going to come back to as something you have to strengthen and always work to improve. Now, for me, in my first year trading, I lost $30,000. That was my tuition into the market, right? And for me, losing that $30,000, the problem wasn't that I wasn't picking good stocks, because I was picking some great stocks. The problem is that I wasn't managing my risk. So I recognized after that first year that really what separates the good traders from the bad traders isn't the ability to pick really great stocks. It's the ability to manage your risk. And that, again, is where the human needs to come in. When we have these awesome scanners, well, we can see the results on there, but then you need a trader to come in and apply these principles, these basic risk management parameters to every single trade, to say, this is too extended, I can't buy it up here. Despite being a really great technical position, I can't buy it. All right, so I've realized that even though I call myself a trader, I'm a manager of risk. That's my job. I'm a risk manager. That's what I'm doing all day long. I'm managing risk on my trading account. The risk versus the reward. And just as an example here, let's say I take 10 trades and I win on the first 9 and I win $100 each. Okay, so I'm up $900 and I have a 90% success rate. It's pretty good, right? But then on that 10th trade, when I'm down 100, instead of cutting the loss, I average down, I hold it, and I end up taking a $1,000 loss. In this example, despite having a 90% success rate, I'm a losing trader. Despite being good at picking stocks 9 out of 10 times, I'm a losing trader. So this highlights the importance of risk management versus solely being a good stock picker. Now, it definitely seems against all logic to allow one trade to wipe out 9 winners, but it's a very common story. And of course, as many of you know, if you've experienced it yourself, taking 10 steps forward and then one huge step back, it's part of trading, and it's the hardest part of trading. If you think of a home builder building a house brick by brick by brick, and then along comes somebody and kicks down half a wall that took him maybe 10 hours to build, right? Now this guy, he's looking at this wall, it's been knocked down. The only way he can build it back up is one brick at a time, brick by brick by brick. And as much as you want to just throw all the bricks back and just build it right back up, you can't. And that happens with trading all the time. There are days where, in one trade, I gave back 3 months of work because I failed to manage risk. I got complacent for 5 minutes and made a huge mistake. Now, that happened to me a lot as a beginner trader. I would get on a hot streak, I would do really, really well, and then I would make one big mistake, and I would give it all back. And what I recognized was that I was allowing fear to hijack my thought process. So instead of making good decisions, having discipline, I would just throw all of that rational thought out the window and get aggressive. Because I didn't want to close the day red. I didn't want to take a loss on this trade. I would lose sight of the bigger picture. So one of the things we talk about, both in our trading course and also obviously in the chat room, is the importance of being calm. Trading is stressful. This is a very stressful job. It's a very difficult job. But we can control our emotions when we focus more on our facts and statistics. And again, this is where Trade Ideas comes in really handy. We can go use the odds maker. We can look at the historical data of a trading strategy. So it's no longer emotional when you win or lose. It's simply part of the strategy. Now, it's impossible to completely eliminate emotions from trading. That's not going to happen. If you try to eliminate it, it's like trying to not think about the beach. Once you're trying to not do something, you can't help do it. So we're not trying to eliminate emotions. We're simply trying to recognize that they're not important in our thought process for trading. What we need to focus on are our statistics. So I've developed a trading strategy that has really good historical data, and it works really well for me and works really well for our students. All right, now my strategy is trading momentum stocks. I trade momentum stocks, and let's just say you think you're good at trading momentum stocks before 10 a.m. All right, so, well, you think that. That's an emotion. How do you know that? The only way you know that is if you can look at your either paper trading history or your actual trading history if you're tracking it. Okay? But there might be another way. And here's the odds maker, right? So let's say you think that you trade breakouts really well that are $10 to $20. You think you do because you've had a couple really big winners, right? But then when you actually look at the data, and in this example, you realize, wait a second, actually the statistics are telling me that I'm really good between $2 and $6, and above that, there's some winners in there, but my power zone is $2 to $6. That's where I need to focus, and that's where the most trades are. So you can let statistics educate you. Or you could say, I really think I'm better past 9:45 because the first couple minutes are just too stressful, right? Because you feel so stressed right at the open. But then you look at your statistics and they say, hey, hold up. You're really good from 9:30 until 9:40. That's when you make the most money, the first 10 minutes of trading, right? First 15 minutes. And then from 9:45 to 10 a.m., you're not that great. So again, this is where we remove the emotion a little bit, and we just say, just as a matter of statistics, my trading strategy is this successful. It's right this % of the time. My average winners are X, my average losers are X. Okay, we always want to have winners be twice what our losers are. So if you are risking 100, it's to make 200. That's a 2-to-1 profit-loss ratio. So my trading strategy is momentum. I'm a momentum trader. I'm good at a couple things, and one of them is momentum trading. I love trading stocks that are running up. I trade momentum stocks, and I trade very specific chart patterns. And I can lose 40% of the time and still make money because I use risk management principles. Now, you have to remember, in this market, we're trading against computers. Over 60% of the volume in the market is algorithmic, high-frequency trading. If you've ever tried to play chess against a computer, you know that it's a losing battle. You'll never win, right? So trying to trade against computers is just as hard. It's very, very difficult. Every trader needs an edge. And my edge, the little spot in the market where I find the most success, is trading extreme stocks in very specific patterns. So we're going to review my favorite chart pattern, how to find momentum stocks, and how to trade momentum stocks. All right, and we're going to go over my trading strategy today, the gap and go strategy. And then in our next webinar, we'll talk about my general momentum strategy, which I trade not just at the open, but mid-morning. And we'll also talk about my reversal trading strategy. All right, so my favorite chart pattern. Now, when price action, right, is plotted on a chart, patterns are formed. These patterns are well respected by traders, but some of these patterns are the manifestation of the computer programs trading shares, and they may not be noticed by anyone. So chart patterns can be really good, and sometimes are meaningless. And you have to be able to differentiate which is which. So if you have a scanner that gives you flat top breakouts, so it's a scanner that scans specifically for stocks consolidating in the hourly range in the top 80%, you know, and not more than maybe a 1% range, right? You'll get a pretty good picture of some nice flat top breakouts. And on some of those results, you'll have a great candidate, and others you'll have a really bad candidate. So we have to learn how to choose the right stocks. Right? These patterns by themselves are not a trading strategy, they're just patterns. And sometimes they work and sometimes they don't. Here's an example of a bull flag. Flag patterns are my favorite, hands down my favorite. I look for flags everywhere on charts. I'm a long bias trader. I trade to the long side and I'm always looking for flag patterns. So in this example here, you see the stock surged up, 3 candles up, a couple candles of pullback, and then it gets ready for another move up. This is a very common pattern. We see this pattern a lot. This pattern works well, not because of the pattern, but because of the volume associated with the pattern. This is a stock trading on very high relative volume. And here's another one, AVEO. All right, surging up out of the gates, a nice gap. Okay, we got long this at 197, pops up here to 270. It pulls back just for a second. We get a little bit of a flag. And then we add back right here on this candle. Right? We know that these pullbacks are often bought up. I love to trade the first and second pullback. Okay, so this is a nice little bull flag right here, and then another one right here. Now the third pullback fails. I focused on the first and second. Sometimes the third one will go, sometimes the fourth one will go, but the first and second pullback on a strong momentum stock are usually the best. But remember that patterns alone are not a trading strategy. A strategy requires both a careful analysis of your statistics, right? You need to know your profit-loss ratios, your success rates, the best time of day to trade, the best prices to trade, right? The right type of stocks to trade. This is all very important. That's what makes a strategy. A strategy is not simply I trade bull flags. That's too vague. We need to be very specific. And again, we're trading against the best traders in the world and computers, right? So we need to be at our best every day. Now, you have a little bit of an idea of the pattern I like, the bull flag, okay? And you know that I'm a momentum trader, but how do we find the stocks? All right? Trade ideas. This is how I find stocks every single day. Out of the thousands of stocks available to trade, how do you choose just one or two? And how do I repeatedly, day after day, find the one or two that are going to make big moves? Right? Because I know that pattern trading, momentum trading, it works really well on some stocks, but not at all on others. So we have to be very selective about which stocks we're willing to trade. So I only trade stocks that are extreme. And by extreme, I mean they're experiencing once-in-a-year type of events, massive volume. That volume is always the result of a catalyst. All right? Catalyst can be breaking news from the company. It can be earnings. It can be any type of press release. It could be FDA approval. It could be an activist investor taking a stake in the company. It could be buyout rumors, although rumors that are vague usually don't have quite as much push on a stock. All right, so here's my scanner. This is a scanner that I use every single day. These are the gappers. And you can see I ran this scan at 8:45. This was yesterday. All right, so at 8:45, I ran the scan. First thing I do, I get up and I start scanning the market. I want to know what's moving, right? Where is there volume in the market? Before the market's even open, what's gapping up? A stock that's gapping up is going to open higher than it closed yesterday. And the only reason a stock is going to do that is if there's news. The stock is not just going to gap. It's going to gap because of something. So instead of just scanning the market for news, like reading, I don't know, Yahoo Finance or whatever, just looking for news, instead of doing that, I look for the stocks that are moving and then go search for the news on each stock. So we saw CDTI was gapping up, 13%. All right, I have this sorted by percentage of gap, and I'm only looking, you can see, for gappers above 4% or below 4%. We've got the volume here. Okay, AVEO was definitely leading the volume. CDTI was not bad, though. I have the days away from earnings. Okay, so stocks with the orange color here are within 1 day of reporting earnings. Sometimes they're gapping because they just reported after hours, and other times they're gapping in anticipation of an earnings call. We have to do a little research to figure it out. And then we have well, we've got the volume column here, but we've got the float column, and this is a really important one. You know, the float, for those of you that don't already know, it's the number of outstanding shares available to trade on the open market. It's the supply. So we know the basics of supply and demand. When there's a limited supply and a tremendous amount of demand, prices go up. So the smaller the number here means the lower the float. So 1.6 million share float is very small. There are a lot of companies, large cap companies, that have floats of over 1 billion shares. That's a huge float. So in order to make a price move in a stock with a huge float, you would need a ridiculous amount of volume, right? But when you have a very small amount of supply, it doesn't really take that much to create a pretty big move. So I always focus on momentum stocks that have a low float or a limited supply of shares, because when there's news and there's good news and everyone's clamoring to get a piece of this stock, the price can go up very, very quickly. S float right here is the percentage of the float that's short. So if you've got a 10 million share float and 10% is short, that's 1 million shares that are short. Let's say the float's 10 million and the short interest is 50%. That means 5 million shares are float. And when this thing's gapping up 13%, 5 million shareholders, 5 million people, 5 million shares are now underwater, right? They're down 50% overnight when you have that big, big gap up, whatever it is. Okay, so I look at the float here and I look at the short interest, and that helps me gauge the potential for this stock. So when we see a low float stock with a high level of short interest, that is a particularly powerful combination. And then we have here the relative social mentions on StockTwits. This gives us an idea of what stocks are trending socially, right? What are stocks that people are talking about? So this is the scanner I look at every single day. This is how I find the stocks I'm going to trade. But of course, on this list, you might have 10, 20, maybe more stocks each day. So you have to go through and pick out which ones are the best. This is the gap and go strategy. Stocks that gap up, go up. So I'm looking for the biggest percentage gappers with the highest volume. They need to be gapping up at least 4%, and I prefer to see at least 100,000 shares of pre-market volume. All right, so once we found the gappers, we're going to hunt for a catalyst. Right? Is this earnings? What's the PR? What's the news? We want to know the catalyst. Some catalysts I weight more heavily. I consider them better, and others I think are a little bit weaker. So we go over the details of that each morning when we're doing pre-market analysis in the chat room. But just know for right now that there are a handful of catalysts, and some are great and some are so-so. I mark out the pre-market highs, and I also draw some trend lines, any support lines, ascending support, resistance. I like to mark up my charts a little bit, and what I'm always looking for is a pre-market flag. I want to see that flag pattern, that quick move up and that sideways consolidation. I want to see that in the pre-market session. Now, I always have pre-market data turned on, so whether it's 8:30 in the morning or it's 11:30, I can always see the pre-market price action. That's very important to me. And as soon as the bell rings at 9:30, I'm ready to take a trade. I don't trade pre-market, but I will trade as early as 9:30 and 1 second. As soon as the bell rings, I'm ready to trade. All right, so I got all my gap ideas from the scanners. Okay, looking for those stocks that have made a big gap up. I prefer 5 to 10% gaps or more. I want to see the stock consolidating in the top 20% of the pre-market range. So if you have a stock that's up $1, right, it's up from, let's say, $8 to $9, we want to see it holding around $8.80, right below $9. $9 is the pre-market high. That's the spot where I'm going to probably want to buy it for a breakout. And so we want to see it holding up in the 880s. 870s is okay. Below 850, we've retraced more than half of the gap up, and I don't like it anymore. So I want to see them holding up. It can be hard sometimes to choose the best stocks, especially when you have 5 or 10 that all look decent. Usually what I return to is the leading gapper, whichever stock is gapping up the most. That'll be one of my first choices. Whichever one has the most volume, that'll be my first or second choice. And I also look at the ones with the lowest float, because I know those ones, if they get a little volume, have a lot of potential. All right, now let's look at a good pre-market flag. This is a pretty good pre-market flag. You've got the move up. We closed around 14 the day before, surged up to $20 pre-market, $20.10. And then we pulled back, consolidating between $18 and $19. That's a pretty decent flag. That's not bad. Yeah, I'd like it if we were consolidating between 19 and 20, but that's not bad. We're definitely well above the 50% retracement line. So we're holding up. We're holding up also above our moving averages. Here you can see a 9 exponential and a 20 exponential moving average. All right, so that's the kind of thing I look for, a nice flag, whether it's a $20 stock, a $2 stock. This is the pattern that I'm looking for. And in contrast, this is a weak pre-market flag. This is not a pre-market flag I would really want to trade, because you have the move here up to 220, and now we've pulled all the way back, right? We basically opened really high, and now we're selling off. So this is a weak pre-market flag, and it doesn't mean it won't go. It's just not as strong. It's not holding up. All right, so with the gap and goes, how do you trade them? Okay, so what works for me, the way I trade these, is when the market opens at 9:30, I usually already have an order ready to buy any of the 4 gappers I'm watching. I always have 4 that I have orders open, ready to send. Okay, so as soon as I see a break either of the pre-market high, so let's go back here, let's go back up to CALA, C-A-L-A. So in this case, I might put an order at $19 to buy 1,000 shares. Okay, my stop would probably be like $18.50. I'd have to have a looser stop because it's a more expensive stock, right? But then my target would be to break through 20 and then hopefully get a move up to 21 or 22. So we've got a tight stop, right? 50-cent risk for $1 profit. That's a 2-to-1 profit-loss ratio. Of course, the tighter the stop, the easier it is to get that big profit-loss ratio. But in this case, I would have an order before the bell rings to buy, let's say, 1,000 shares at $19.05. All right? And then as soon as the bell rings, 9:30 and 1 second, if it breaks 19, I'm jumping in. If it immediately sells off, then obviously I'm going to hold off for a second, just let it shake out and see where it goes. A lot of times what I'll do is a 1-minute opening range breakout, which I'll show you in a second. So this is what my level 2 window looks like. So I type in the symbol, right? I've got the bid and the ask, and I've got the time and sales. Right here, I'll type in the share size. So if I want 2,000 shares, I'll type it in there. If I'm going to do a market order, it'll be market. I can click on this and drag it down to limit. All right, and all I have to do, right? I can go ahead and type in the price. The price will be right here. When you're on a market order, the price is grayed out. But when you're on a limit order, you go ahead and type in the price. So I type in the price maybe at 520, 522, and then all I have to do is click buy. That's all I have to do. So I'll be ready to hit the buy button. So as soon as the market opens, I'm ready to click buy. And I've got this level 2 up for 4 stocks. All right, so I'm watching 4 stocks right out of the gates. The orders are already set up for 1,000 shares or 2,000 shares or however many I want, and I just click the send button, click the buy button. All right, now if we have a setup where instead of immediately ripping up to, let's say, $19 or whatever it is, then what I'll do is I'll use a 1-minute opening range breakout. So if that first candle pops up, a lot of times when a stock is a little bit off the high, let's say the high was $20, we're off the high. I'd like to buy it at $20, but that's not always realistic. So I'll look at the first 1-minute candle. If the 1-minute candle breaks to the upside, okay, then I'm long with my stop at the low of that first 1-minute candle. I'll give you an example in just 1 second. So a 1-minute opening range breakout is one of my second favorite ways to buy a gap and go setup. Now this strategy only works in the first 30 minutes. Okay, I don't trade gap and goes past 10 a.m. This is a strategy for the first 30 minutes of trading. Now, to answer your question about why I don't use buy stops, because I could put a buy stop, let's say at 510, and as soon as that goes off, I'm in. The thing is, I want to see the level too, because if we come up to 510 and there's 100,000 shares sitting there, then I know just because someone bought 1,000 at 510, there's still 100,000 sitting there, and I don't want to get in. I'm going to wait. I'm going to wait until that level 2 thins out, and it looks like we're going to break. And I'm also watching the time in sales to read the volume and read the tape and see, do we have buyer control? Do we have a lot of buyers coming into this? Or is it a little choppy still? Do we have a mix of buyers and sellers, and maybe we're not quite ready to break out? So the decision to get in is not simply based on breaking the price, it's breaking the price with volume. And that's something the buy stop can't really hunt for, right? That's where the eye of a skilled trader needs to come in and say, this looks good or this doesn't look good. All right, now the second way to buy an opening range, or the second way to buy a gap and go is to buy the pre-market high. So that's like an opening range breakout. We've got the pre-market high in the case of Kala. It was up at $20. So I would buy the pre-market high. As soon as that breaks, we're breaking out to new highs. Okay, so I really like buying either the first 1-minute candle that breaks or buying the pre-market high. So in the case of a stock where the pre-market high is $20 and we open at $19.80, well, I could use a 1-minute opening range breakout, or I could just buy it as soon as we break $20. And if we break $20 in the first 10 seconds, then I'm long at that point. If it's not for 3 minutes in, then I would wait until 3 minutes in. But either way, I would wait until the high of day break instead of buying the 1-minute opening range breakout. And that's going to be case by case. It's going to depend on the setup of the stock. And we're going to look at a couple examples. All right, now alternatively, if a stock runs up from a gap and I missed it, right, if it just pops up and I missed it, I'll look to get in on the first pullback. Okay, because the first and second pullbacks are almost always bought up on really strong stocks. And this is kind of the transition from gap and go trading to momentum trading, because sometimes stocks will be strong out of the gates and they weren't even a gapper. They just surge up 20% as soon as the market opens. So it becomes a momentum stock, which we'll apply the momentum strategy to, which we'll go over in our next webinar. But for right now, we'll just focus on gapper stocks. And the first pullback, if we miss the trade right out of the gates, the first pullback is often a spot to take a position, and that'll usually take the form of a bull flag. And now lastly, you have the gap and go red to green. So sometimes these gapper stocks, they surge up, right, pre-market, they open, and then they sell off for a couple candles, right? Anyone that's in takes profit, you get a little bit of sell-off, but then you can get a really powerful red to green move, where you go from red on the day and you break through the open price. So let's say a stock opens at $8, drops down to $7.50, and then surges back up. As it comes back up through $8, I like to buy for that red to green move. Buy it at $8 for that surge through the open price. Okay, that red to green move works really well on strong gappers. But again, you need high volume, which means you need to be trading the right gappers. You need to be trading stocks that other traders are watching. So you need to follow the volume. And that's one of our jobs. I'm a manager of risk and I'm a hunter of volume, right? Or in other words, I'm a day trader. But those are the things I'm doing every day. So when I'm doing a 1 minute opening range breakout, my stop will be the low of the last 1 minute candle, even if it's pre-market. So I'll just use the low of the last candle pre-market. That works for me. You know, if there's a little bit of a pullback pre-market and a logical area of support, then maybe I'll use that area as my stop. It'll depend case by case based on the price of the stock and how far away my stop is. I rarely will have a stop more than 20 cents away. And I don't average down. So if a stock goes against me 20 cents, I'm out. And that's fine. I'll take the loss. I take those losses, and it's not emotional. It's just part of my strategy. I can lose 30-40% of the time and still be very profitable, but I have to cut those losses quickly and make them small. So as soon as something doesn't look right, I get out. That means I have small losses, right? And I have small winners because sometimes I'll get in a stock and it doesn't work out and I have to get out for a small profit. But all of the trades are set up for a big win potential. And that's important that the trade has that potential. All right, so now let's look at OHGI. This is a pre-market gapper. And I said we would talk about this one because this was a particularly awesome trade. All right, and I was really pumped about this one. So this was our gap scan. This was back from last week, 5/28. All right, so you saw OHGI there. It was gapping up. We had a 14 million share float. We had pretty good, social activity on StockTwits. We had only 38,000 shares of pre-market volume, and this was kind of the problem because I said, I like it, but the pre-market volume is really light. But I like the pre-market flag. We also had BioC up here. Now BioC has 900,000 shares of volume and a similar float, but doesn't have as much social interest. And you know what? This stock has been traded a lot. It's kind of been overtraded. And even though it can be fun, it's not one of my favorites. And then we had RALY up at the top, and that was a buyout, so there was no trades on that one. So I was watching BioC, OHGI, and SPHS. This one was another cheap one, but had some good volume and a pretty nice float. All right, so from the watch list, I said, okay, I'm watching OHGI, which at that time was 216. I said, I'm watching it long over 220. It ended up popping up a little bit more pre-market. All right, there was some news here that they had announced a pay platform partnership supported by Alibaba. Anything that has to do with a big company like that for a stock that's priced at $2 is huge news. All right, so the news was good. Here we've got our pre-market flag. You can see you've got this consolidation here at 236. All right, a little bit of consolidation, a nice flag. It had a little surge after, or just going into the close, and then it was gapping up here. And you can see what the 5-minute chart did, from 236 up to 582, right? But let's not get ahead of ourselves. Let's look first at the 1 minute. All right, so this was a 1 minute opening range breakout. And I traded BioC, by the way, and you'll see that on the next slide. I traded BioC and I took a loss on it. It popped up, I did the 1 minute opening range breakout on BioC, and I lost. It was a small loss, and that was fine. I came and I traded OHGI. We had this first candle, okay? The high was 269. The low was 235. I got in at 270 for the 1 minute opening range breakout. Immediately, it popped up to 350 and then up to 375. We pulled back, added on the pullback, and then scaled out on the move up to 558. 100%. A 100% return. This is a gap and go. Gap and go stock, 1 minute opening range breakout. My only hesitation was the low volume, and I didn't take more size because I was nervous about the volume being as low as it was. And my stop, as you can see, from 270 down to 235 was a little far away, right? 35 cents, that's a bigger stop. So I took a smaller position, but I was still able to lock up $1,300, just under $1,400 in less than 25 minutes of trading. Okay? And you can see BioC, I took the loss. but I still closed the day over $1,000. And that was in 30 minutes, trading gap and goes, 2 gap and goes. And we asked our students in the room, how did you do on OHGI? 91% of the students that traded it were profitable. It's a very simple strategy, but it requires specific skills, right? Just like any other strategy, it requires specific skills. So here's CDTI. This is another gapper, right? CDTI gapping up here. It was second one down on our gap scan. This was yesterday. All right, AVEO was up at the top, 273. Here's CDTI at 239. All right, so we're gapping up 16%, 327,000 shares of volume. You can see we're not next to an earnings date. We had news on it. Okay, now LTRE, that's interesting with a 4.47 million share float, but only 1,500 shares of volume. So that one doesn't really work, right? I mean, we watch it out of the gates. We keep our eye on it. Maybe it'll pop up, but it has no volume. OHGI, this one's kind of played out from the big move last week, so not really trading that one. Plug Power, this one, you know, it has 167 million share float. So this is where we talk about it has such a big supply that even though it has 445,000 shares of volume, it needs more than that to have a big move, right? The float on this is 10 times the float on CDTI, right? So it requires 10 times the volume to have the same type of move. So CDTI with less volume, this is actually more important because the volume is always relative to the float. We can't forget the float of these stocks. All right, now social volume on CDTI wasn't particularly high. It wasn't particularly high on any of the gappers. Now AVEO, this was up here, and I did trade this one as well. This was on our watch, but it ended up not being very. It popped up, we got in, and we got back out. It was a flat trade, so that's great. We want trades that are bad trades to be flat, right? If we can only lose 2 cents or 3 cents or make 2 cents or 3 cents on bad trades, that's a great bad trade. Because on the good trades, like we saw in OHGI, we can do really, really well. Okay, so CDTI, news out, it's clean diesel. Now, I'm a big fan of the biotech stocks. Who isn't, right? They're so fun to trade. They're super active. They're super volatile. So as day traders, we're looking for stocks that are going to make big moves. Biotechs make big moves, right? So they're a natural friend of day traders. Clean diesel technology, well, the sector's not really as hot, but this stock has been a pretty big mover in the past, and it's good to keep in mind former runners, stocks that in the past have made big moves, because they can often repeat those moves again when they have good news. So we're gapping up 14% with 3.3 million in volume, or 3.3 million share float, 300,000 shares of volume, and we do the same thing, a 1-minute opening range breakout. Okay, this is what the pre-market flag looked like. You can see here in gray, this is E-signal, and you can see we've got the pre-market flag with a high of 251. Okay, tapped up here, pulled back to our 9 exponential moving average, okay, and then started to move up out of the gates. Now in the first candle, this first 5-minute candle, I was trading AVEO, okay, and I had CDTI on watch on a second level 2 window. All right, so I'm watching both. I have 4 stocks I'm watching, and I have my orders ready. All I have to do is click send, so it's as quick as moving my mouse or tabbing over to that level 2 window and clicking the send button. It's very quick. All right, this was a 1-minute opening range breakout. The long spot was over 239. Okay, you can see right here. So we've got the first candle, which is a small red candle, and then we've got the second candle, which is a small green candle, and starting to come back up. And I said, okay, guys, I like this over 239. This looks good. 239 breaks. I jump in. I get filled 2,000 shares at 245. We pop up here to $3. We pull back. We go up to 320 and up to 330. I mean, this is a really big move for a $2.30 stock. I mean, these are huge moves, and it's ridiculous how clean the price action has been, but this was a really good move. All right, and that took about 5 minutes, $620. Not bad. That's the gap and go. A nice quick trade out of the gates. I find it easy to make money. It's hard not to give it back. Being disciplined enough to not overtrade once you have profit is really hard. Lots of traders want to keep trading, but you have to remember, take your profit and walk away. Every green day under your belt is a confidence booster. And I'm an income trader. I trade for income, right? So this isn't like I can just take a 5,000 share position of CDTI and hold it for, a couple weeks looking for, a 50% gain. I'm aggressively trading my account every single day to generate income. $500 to $1,000 a day is my goal, right? And that translates to a really nice annual return. We asked our students, how did you do on CDTI? 88% success. Now, of course, there's some students that were on the wrong side of it, and that happens, even to the best of us, right? But we're really happy to see so many of our students profiting from these trades. So we'll look at one more here. This is BLFS. This was today, all right? So I threw this one on here for the webinar tonight. This was a trade we took today. BLFS, gapping up here, only 12,000 shares of volume, so I said, not crazy about the volume there, it's pretty light, but I love that low float, 5.97 million shares, and look at the social relative mentions, 3.4 thousand, that's great. All right, this is really nice. Now, up at the top we have SNCR, that's a $51 stock, so that one I don't care about. I don't really want to trade that price range. I prefer under $20. Okay, we had a couple others. We had SYN. This one I thought actually looked decent, but didn't end up playing out very well. It's a 60 million share float. So again, that's 10 times the float of BLFS. So it requires a lot more volume. So relatively speaking, even though this was gapping up with only 12,000 shares, they're fairly similar when you factor in the float. Okay, so we had a news catalyst on this, right? We search the gappers, we look for the news. We don't necessarily need to understand it. Some of it's science talk because these are biotechs, but we recognize that there's news and people seem interested in it. So we're traders. We're not investors. We're not long-term, fundamental type of perspective traders. We're just looking for quick in, quick out, get our profit every day as often as we can. Now, this was a messy pre-market flag. I say, guys, I like it over 240. I'm going to set an order for 245 to buy 2,000 shares. But I don't know if I trust it because it just looks messy on the pre-market flag. This is not a clean pre-market flag. It's not. And you've seen some examples of clean flags. This is not a clean flag. So right out of the gates, I was watching SYN, which is our leading gapper, and there were a couple others I was watching. Right? And then here's my trade idea scanner to the rescue, saying, ding, 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 look at BLFS. I've got the audio turned on, so it's making noise in my headset. All right, let me close this here. All right, so BLFS, making noise, 931. I see it popping up, and I think, okay, here we go. This looks good. All right, I jump in. Let me scroll down. I jump in this at $4. I bought it high. I wanted to get in at 250, 245. Obviously, I completely missed my entry there, so I missed that. Then we get the pullback here. Okay, a little pullback on the 1 minute, $4. I jumped in at 4, popped up to 444, 430, got a nice profit, $700. Again, first 10 minutes of trading, our work is done. This went from 250 up to 444. I mean, that is a really big move. That's huge. But you know what? We see it all the time. Let's look back here. This was back in December, 12/29. This stock gapping up $8.80. We jumped in for the gap and go, got long over $8.80. The stock went up to $19. That's crazy. But it happens, right? Who am I to say no to a market that wants to run? So we take the profit. And here's an example of a red to green. This was on Juno. We have a gap up, we get a little bit of a pullback, and then we surge up through the open up to $56. So it's a 5-point rip from 51 up to 56. Now, this is just to also show you that these work on higher price stocks. I just prefer lower price stocks. So it doesn't mean you can't trade them on a higher price stock like Juno. but they work better. I find they work better on lower price stocks. All right, now for everyone that's hanging out here in our webinar, we do have some special discounts for you. And of course, we'll be doing a second webinar where we'll go over some of my momentum trading strategies and my reversal trading strategies. For anyone that joins our monthly chat room, you'll get a 15% discount off your first month. Or for anyone that wants to join one of our day trading classes, where I teach from 4 to 5 every day, you can join the class, again, with a 15% discount. All right, now anyone that does join the day trading classes in the next 24 hours will get a 50% discount on their annual chat room membership. Okay, and of course, anyone that has questions, you can feel free to call them out here. I'm looking at the questions bar. Let's see. So that's a good question about entering stop loss orders simultaneously. Now, one of the problems, and I'll put my email up here. Anyone that has other questions, you can feel free to email me. One of the problems with some of the low float stocks is that they're not shortable. So let's say I buy 2,000 shares and I immediately put out a stop order to sell 2,000. Right? Now, if I want to go and sell half when I'm up 20 cents, I've got to go cancel my sell order because I can't short the stock and I can't have 2 sell orders open at the same time. Right? So I've got to go cancel that order and then try to sell half. And these stocks move so quickly, as you can see from some of those examples, that there just isn't time. So I find it easier just to use my hotkeys, right? Which means I can sell my full position as quickly as pressing Control-Z. Control-Z, it's the undo button, right? Undo, whoops. Let me get out of this position. That's how I get out of a trade, Control-Z. It's that quick. So this is also about using the right technology. And of course, Trade Ideas is a big component to my trading strategy, having the right stocks in front of me every single day. But you need to have a broker, ideally, that gives you hotkeys. That's going to help you. Let's see. So my strategies, I trade the gap and go strategy at the open. And then from 9:45 until 11:30, I trade momentum. So that'll be any stock that's trending up. All right? And then from, well, I don't trade a lot in the afternoon. I'm mostly working with students teaching class. But I will also trade reversals in the morning. So I have 3 primary trading strategies. But one of the things, you know, if you're learning to swim, once you have one stroke, you can tread water, right? You can survive in the water. And that's kind of the same with trading. Once you have one strategy, you can survive, right? And then you can add a second strategy. So you know the crawl. Now you can add the breaststroke. Now you can add the backstroke. But if you have nothing, then you're sinking. So you first need one strategy, and then you start to add a couple more. All right. The monthly charge to our room is $99 a month. Now, with interactive data or interactive brokers, yeah, I mean, there may be orders that you can do, one cancels other. That's not something that I've set up with my broker. You know, if you try to do complex orders like that, I mean, if it works for you, I'd say by all means. You just kind of have to figure out what works best for you. So I don't really have a problem where, because the float is small, I'm not able to get instantaneous or nearly instant fills. You know, that could be an issue depending on your broker or how you're routing the order. You know, in our trading course, we go over some of the different routing techniques and some of the kind of nitty-gritty stuff, because some of it is fairly specific, the right way to set up orders, the right routes to use. I use eSignal as my charting platform. I use Trade Ideas for scanning, and I use SpeedTrader as my broker. I wouldn't trade any stock with a float more than 100 million shares. And in terms of how far a stock would retrace to the point where I'm like, I'm not going to touch it, it would be a 50% retracement in most cases. So my afternoon trading strategy is hanging out and talking with students about trading and not trading, because my afternoon trading is really bad. I don't make money trading in the afternoon. I never really have. I've always done really well in the morning and not as well in the afternoon. So while I think it's, of course, good to develop additional strategies, I've found it's a better use of my time to help teach students how to trade. So that's what I do in the afternoons. I work with students. And in the morning, I focus on doing what I do well, which is trading momentum. Now, from time to time, we'll have a momentum stock that is surging in the afternoon, and I'll trade that. But that's sort of rare. What we would need for a stock to start running in the afternoon would be breaking news. So the only thing I would really trade in the afternoon would be breaking news that would then result in momentum. Level 2 for me is very important for my day trading strategy. Now, if you're a swing trader or you're a midterm kind of day trader where you hold for 15 minutes or an hour or whatever, you may not need level 2. It may actually be distracting. But when you go very aggressive, especially on these gap and goes, and you want to move in quickly and move out quickly, level 2 is important. You can see my trade ideas layout here. I've got a lot of scanners. I've got scanners for the gappers, I've got high of day, I've got reversal scanners, pullback scanners, surging up scanners. So I have a lot of scanners. And of course, just like anyone else that uses trade ideas, I've spent a lot of time kind of tweaking them, tuning them, and they help me every single day find the good setups. In terms of a desired ratio for float to short, I don't have something that I would say specifically I look at or look for. I'm just generally looking for a float of under 20 million shares when that's possible, and a short interest, I don't really care. If there's a high short interest, I just think that's awesome, but if it's not high, I don't consider it really a bad thing. Right, so in the trading chat room, it's a lot like this, except you can also see my face. It's a video, it's audio, and you can see my screen. So you can watch me trading in real time. So like Dan was saying, the benefit here is having a trader who's been in the market for a long time go through this data and say, this is what looks good to me. And it may not be what works for you, it may not be your strategy, but it's really helpful just to have the idea generation. So we've got hundreds of people in our room that all enjoy hanging out, talking with other traders, and seeing what I'm doing. So we do have some of these trades, some of these scanners available with Warrior Trade Ideas installation. So not all of them, but some of them are available for free. What we encourage our students to do is to learn the strategy. And this is just a general rule of thumb. If you simply wait for someone else to say they're buying, you'll always buy behind them. So we don't want to just feed you alerts. We want to teach you how to trade. That is our focus. And trading isn't that hard. So it's easy to learn if you're disciplined, if you're dedicated, if you're diligent, right? The 3 Ds. So we want to help you in that process. We want to help you avoid some of the rookie mistakes that, for me, cost me not only $30,000, but a lot of stress. All right, so it looks like we're coming up here on an hour. So we'll ask, let's see, I'll answer one more question. I set alerts. I set audio alerts. I don't have it trade. I don't have Trade Ideas trade for me. I just set audio alerts, and then I go and manually look at all of the stocks. Now, one of the reasons is because some of these stocks, by the time they're alerting, they might be up 80%. I don't want it to automatically trade for me. I need that, human intervention to look at it and say, okay, I can manage risk on this. I can be aggressive, or I should be a little, conservative on it. All right, so I want to thank Dan and Scott and Trade Ideas for having me. Super excited to do this. Thank you all for hanging out. Of course, anyone watching the recording, you can feel free to reach out to any of us by email, and we'll be excited to do it again soon.
Ross, I want to thank you for taking the time this evening. It was such an informative webinar, and you really touched on one of the most important things, I think, to everyone, and that is how critical it is to manage risk. And managing risk is something that isn't completely formulaic, as Ross said. That requires some feel, and that's why mentorship is important. And again, professionals do it in sports, and they get paid millions of dollars for it. And again, we wouldn't put Ross here in front of you if we didn't think he was doing something really good for the community of active investors. So we thank you, and we encourage you to check it out.
Yeah, thanks everybody. Thank you, Ross. Contact Ross at ross@warriortrading.com. Email us info@tradeideas.com. Keep an eye on your inbox later tonight or tomorrow morning for a link to the replay of this video and a recap of what Ross's offerings are. I went ahead and got a screen cap of that when you were showing it, Ross. Thank you. Thanks, everybody. Have a good evening.